From the Nigerian Exchange Limited. Monday's trading is negative. The all-share index is down 0.44%. Gainers, we have Eternal, Royal X, CAP CAP Hotels, Regalings, and Sterling Bank. For the losers, we have Enama Lewer, we have Afriport, and we have Wema Bank, and we have Mansard Insurance. We'll be joined by a financial analyst and stockbroker as we're going to be talking to us via phone. But Effiong Ekop is already in the house. Effiong, what do you make of this? Last week, despite the holidays, we were able to close positive Monday, Tuesday, and Friday.
I actually prepared, coming here to review what we had last week, the 3-day positive trend. But as we said on Friday, that if K is not taken, we will see anxious investors moving for profit taking. I thought that would be around Wednesday, Thursday. They are so quick to start this Monday. It is on the back of those 3 days that prices, jump up or the average. So whatever margin that they think they have on their investment, you see the hungry investors, they are moving in to apply and then take profits on it. It's so cheap. So you see, it now turns the character of the markets, to short-term playing, which is not how it's supposed to be. Market is supposed to be for long-term. You leave your funds there, the market goes up, comes down, stabilizes. In the long term, you really don't lose anything. You gain from everything. But the anxiety, the problems, the conditions in the external, elements are beginning to, force investors, to look for just quick way of entering the market and then coming out.
Let's hear from Mr. Faka Ejo. Good afternoon, Mr. Faka Ejo. Thank you for joining us on the show.
Good afternoon.
Yes, the market is down 0.44%, the first work day of the week. How does this come to you?
Like Effiong has said, it's a normal phenomenon in the market. If we have just a straight line movement, and I wonder where the prices will have been by now. Maybe it will have hit heaven. But it's always subject to whatever is happening within the economy and also the macroeconomic factors as well. So for what we've seen today, I think the market was dragged down by some stock in the banking sector, First Bank, Stanbic, Boa Cement, MTN. And I think those were the major stocks that actually pulled down the market today. But I think that this will happen, and the volume that we saw today is not really substantial, and the value too. So I believe that it's normal for a Monday, and we only need to hope for the best in the next trading day.
Okay, now let's quickly project as we look at the next trading day, and we also expect inflation figures. I know there's a connection between all of this. What do you think?
Yes, there is, because with the pressure on the naira, the external reserve depleting by the day, and the hope of resuscitating that is actually very dim. And also with the inflation figures. And I was telling somebody that the actual inflation figures is much more than what we are seeing, especially when it comes to food inflation. So with the correlation between the two, we are most likely, if they don't tamper with rates, then they may not really have a significant impact on the market. So you may see a situation like this a day or two, but the market stabilizes again, and we could begin to coast home with positive trends, which also will end up in negative trend thereafter. So it will always be here and there, at least for now, since there is nothing major that will actually upturn the situation.
So we can put our money where our mouth is. We can continue to invest in equities market. Is that what you're saying?
Yes, I think it's only I keep saying it as something that the equity market is a long-term market. People bought January last year, and they are holding it now. They have nothing.
Your account is low.
Mr. Faka Ejo. All right, then we'll try to reconnect with Mr. Faka Ejo. They're making a brilliant point with regards to projections. Effiong, take it away from there and also take us to see what's happening in the African market.
Last week we saw the index performing so very well, 0.49%. And this is something that is helping investors, to go quick for profit. After this, let's turn around to African market.
Yeah.
We see that across Africa, market closed in different directions. In South Africa, market is positive in the sense that many fund managers are rooting for, bonds of governments and then companies in a way to help the infrastructure developments in the country. Then if we go to the Kenyan stock markets, Kenyan market is down 0.98%, almost 1%. And that is investors staying, on the window to sell and then take profit of their investment. They do not also want to hold their investments for a very long time. Coming back to West Africa, the stock market in Ghana, Accra, closed in a very terrible situation, flat. And that market has had a problem for some time, especially the banking subsector, insurance. So we see investors being jittery largely in the Ghanaian market. So stability may be, something that we look forward to. But for now, the market closes flat. So if you round up performances of African markets, you see that they are responding to external issues that are really surprising. Take of security in Nigeria, insecurity in Nigeria, value of the exchange rate, and then if you go other countries, effects of coronavirus, all of these are, affecting African market. So lastly, we need to say the issue that we brought last week, the stock that Africa is made of, is going to open, tomorrow. Okay. The stock exchange, be able to, let the international investing community understand what comes out of the Nigerian economy.
All right, thank you very much, Effiong Ekop. It's a good way to live it. Now, let's